I'm Matt Bishar with NAREITWeek.com here in New York City for REITWeek 2015, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Jeff Fisher, Chairman, President, and CEO of Chatham Lodging Trust. Jeff, thanks so much for joining us.
Morning, how are you?
How would you describe Chatham's pricing power as it relates to room rates in this current environment?
Well, we're in the part of the hotel cycle right now, which we characterize as kind of mid-cycle, where we're able to get very good, we call it ADR, average daily rate increases in our hotels. So that's really the primary RevPAR push for us in 2015 and 16 and going forward here. And because our hotels are located in very strong markets, primarily coastal markets with good growing demand generators, and our hotels are select service hotels, mostly upscale extended stay hotels, that really caters to the corporate business traveler, and they're willing to pay more money. And so our ADR increases and therefore our RevPAR increases have been strong, and I expect that to be the case going forward.
And Chatham is currently renovating and refurbishing some of its properties. What makes this a good time to invest in those upgrades?
Well, it's really kind of part of the answer to the last question. I mean, if we can get more money for the room and therefore make the room more attractive, we've done most of the renovations in this portfolio early on. So now we've got 2 hotels this year, 2 or 3 next year in what we call normal cycle renovations, which are primarily kind of soft goods and things in the room. But absolutely, we're getting a strong, return on our investment in these hotels. We want to retain the guest and we want to enhance that guest experience.
And as you look at the next 6 months or year, what's the biggest concern for a lodging CEO like yourself as you look on the horizon?
I think that the primary issue in hotel land is always the same. It's when will new supply, really come to a level where occupancy rates start to drop and we kind of get that cyclical downturn. But we're really so far away from that right now. I'm not worried about it. It's something we keep our eyes on. And that's why, with the many cycles I've lived through anyway, we acquire hotels in markets where it's really hard to build in the first place. Zoning impediments, entitlement, obstructions or issues, and primarily very high land costs. So that really insulates our hotels for the most part from those issues.
Jeff, thank you so much for joining us.
All right, thank you very much.
For more on this and other REIT news and analysis, be sure to visit REIT.com.